enough, it came after 6 up days in a row. So 6 up days, you could argue that you were due for a pullback. The question is it just a pullback to support right here? This is where you should have support right around 20,400. If it holds that, maybe it gets another up move. This is the NASDAQ 100, and again, look at this, down 4.3% on the day for the NASDAQ 100. That is probably one of the bigger drops we have seen in one day in a long, long time. And what you can really see here is that the market going into the CPI number was rallying up because it thought we were going to see a reduction in inflation, lower inflation data. And in one day, you've wiped out 1, 2, basically 3 up days in a row. You've wiped those, and those were big up days. I mean, the S&P was up over 1% on all those days. You've now wiped it all out in one single day, and that's technically speaking, that does a lot of damage. The one line I'm really looking at now is from this low in June to this low that we put in early September. That's your big support line. So I'm watching that closely. Can it hold going into the Fed? Do we retest it? Does it break below? I mean, how does it all play out? But if we break this line, guess where you're headed? You're headed all the way down to the June lows right here, and that would be another nasty, nasty sell. So yesterday the last couple days I was taking some of my longs off the table. There were stocks like NET and some of these other kind of tech stocks that had rallied significantly. So we were looking to take some of those off the table. And then yesterday I bought SDS and QID, so got exposure to the short side of the S&P. And I'll show you why. I mean, it was really kind of cool to see. If we go to the SPY chart, pre-market, by the way, we were up. And in fact, yesterday, look at this. So as a technician, you had a 4-day up move right into this pivot, which then coincides with this little pivot right there. And then it makes sense. 4 days up, got to have that pullback right off this little area right in here. So I didn't have a ton of short exposure out there, but I certainly got that exposure after that 4-day rally. Crypto-wise, I mean, you're seeing Bitcoin get slammed today. That's a nasty fall on Bitcoin. Now, interestingly enough, it came after 6 up days in a row. So 6 up days, you could argue that you were due for a pullback. The question is it just a pullback to support right here? This is where you should have support right around 20,400. If it holds that, maybe it gets another up move. I'm still in the camp, though, that when all is said and done, 6-12 months from now, we're going to have seen crypto and Bitcoin go down quite a bit more before all is. Yeah, so I think that's definitely a chart you want to pay attention to, because just like the individual charts of the cryptocurrencies, it does tell a story. So it tells you about how much money was chasing at the highs. The head and shoulders, like you said, is absolutely crystal clear there. And interestingly enough, one interesting comparison, at the height of the dot-com era, guess what the market cap was of all the dot-com stocks? Right around $3 trillion. So a weird parity there as well with the cryptocurrency top, which was right around $3 trillion as well. And now we're kind of living through that dot-com blow-up of the crypto markets. I mean, I was in the camp of 50 and then an additional 25 into year-end. I think you have to think 75 now. This is the 10-year yield chart. 10-year yield is nearing that 3.5 double top. So again, I don't know if we'll double top and pull back here, which would indicate that markets start to think the Fed may do the 75 and then kind of sit on the sidelines. But it certainly is something I'm watching. But I would say, again, what I hope the Fed does is if they're going to do 75, I hope that they sit on the sidelines for a couple months for the sake of the economy, for the sake of everyone else. I do think inflation will come down. It's just kind of lagging at this stage. And so I just hope that they don't overdo it too much, push us into a dramatic recession. Then you see unemployment go sky high, 8%, 10%. And I do worry that that could be what the path they're on. So going into year end, I mean, I hope that they only do another 25 after this next one. Yeah, so you're 100% right there. I mean, the inflation we're seeing is in spite of a 15% strengthening of the US dollar since the start of the year. So imagine if the dollar was flat or negative on the year. That's the one saving grace, I think, that at least if you go to another country, like you can go to Europe right now or Japan, and your dollar goes really far in terms of taking a nice vacation. But needless to say, it is the dollar. And by the way, it's very rare for the dollar to go up and the bond market to drop, meaning yields going up at the same time. That is super, super rare. not a good scenario at all. That's kind of like the death march, if you will, for the overall economy. So it's something that, again, people are going into the dollar because of safety. They're very concerned about geopolitical things, Russia, Ukraine, China, Taiwan. Then you throw in potential global recession. That's making people buy the dollar. Then the Fed is tightening, which is sucking dollars out of the system. That's strengthening the dollar as well. So all of these factors are kind of coming together to create what I would worry would be that black swan event where you could get some major breakage in the system. And then the question is, you get a major breakage, what's the Fed going to do? With 8% inflation, can they print us out of that? I mean, it's nuts right now. So this is a trend line that I have on that I'm paying attention to. Right now, we're holding this trend line. If at some point the DXY breaks it, then that would potentially be a new phase. That could be the marker where the Fed starts to sit on the sidelines. It could be the marker where interest rates start to fall, the dollar starts to weaken. Maybe there's a comeback in the economy, or at least in the stock market and the crypto markets. But I think as long as you remain above that line, you have to think that markets are going to be very tricky in terms of going up. Yeah, so the fact that the 2-year is going up and well past the 10-year at this point, that's even more inversion of the yield curve, right? And basically, inversion of the yield curve is the market telling you that a recession is coming. So again, it's been a great historical predictor. The fact that we're this kind of inverted is even worse for the overall economy in terms of a kind of a signal of what is to come. But bottom line is, I mean, people are scrambling, and bond market traders are scrambling. These moves are historically out of control to see the bond market make these type of moves. And again, it's the market trying to come to grips with everything that is going on: inflation, geo instability, the economy, COVID's recovery. I mean, all of that stuff it's trying to price in, and right now it's basically flailing to try to figure it out. Yeah, so while, you know, if you're not a swing trader, and I generally do swing trading and day trading, then I think you have to go for protection right now. I still haven't priced in that the S&P is going to go to those pre-COVID highs, which I think on the S&P is like 3,400. So we still got a lot of downside to go, probably in the next 6 months or so. What I would do is I would say have some cash on the sidelines, because as things get less expensive, there will be opportunities out there for stocks that get really discounted. And I would go towards like trusty, dividend paying. They're not sexy, but in this market, you just want to preserve capital and grow it a little bit. You're not trying to make 300% of your portfolio. You're trying to make 20% a year type thing, while everyone else is dropping 30% as the S&P collapses. So that would be the angle. Look for an IBM type thing, like GSK was one of my favorites here. If we bring up that one, this pays a 7% dividend, and look at the cliff dive it's taken down here. So I'm really intrigued by a stock like this. When you have a 7% dividend paid out, it kind of cushions the downside, and it's already gotten crushed. I also think gold. I mean, you know, everyone kind of bashes gold, but even though gold's down about 4 to 5% on the year, that's in a market where gold, the dollar has rallied 15%. So think about the outperformance on gold. Number one, if you trade it in terms of euros or yen, it's having an awesome year. Just because it's in terms of dollars, it's down a little bit. But if someone said, hey, the dollar's going to be up 15% in 2022, I would have said, oh, well, then gold should be down 15%. The fact that gold is only down 5 or 4% tells me it's way outperforming what it should be doing. And when we finally see that dollar come in, gold should really outperform. So I think, again, conservative, but you can still make money in this market if you're conservative and do the right things.